Good day, ladies and gentlemen. Welcome to Everyday Finance with Jay. My name is Jay. Today, I'd like to discuss about how to get started with investing in the stock market, and if you've been investing for a while, I would also like to talk about what areas of the market to focus in and what specific stocks that I'm currently looking at myself. I've recently a video posted about how and when to invest. A really good video, an add-on to this one. Let's get started. The first idea I'd like to discuss is about the stock market as a whole. I'd like to discuss what it is about. It's about a big conglomerate of a bunch of companies that are traded publicly, which means that you can support them with investing into their stocks. And to get started into investing in the stock market, first you have to choose a brokerage, a company where you put your money into them for them to hold, and then for them to invest into different companies that you like them to invest in. For example, personally, I use Fidelity. This video is not sponsored by them, it's just what I use. There's a bunch of other free softwares and free brokerage companies out there like Robinhood, TD, Ameritrade, Vanguard, the new one that came out, Webull. There's lots of options for you to choose from. Once you have your company that you want to go with, wire some money, transfer some money from your bank account into them. And the amount that I'll recommend is just extra cash that you have that you're not depending on right now for emergencies such as rent payment, insurance, auto payments, going to the grocery store. What if you lose your job? If you need a certain amount of emergency savings, typically 3 to 6 months of all the bills that you have, and if you have money on top of that, that's what I recommend, especially now when everything is 20, 30, 40, or even more percentage off from where they were in February. Okay, now your money is in a company and now you're looking at how to invest. I think right now people are looking at these big names like Zoom Video and Amazon, Netflix. They're growing and they're doing phenomenal, especially Amazon. And Netflix, they have beat their all-time high, and I believe they continue to grow because more and more people spend time watching videos on Netflix and buying stuff off Amazon. So the way to get started as an investor and if you have been investing for a while, is to look at what is happening today and what is going on in your life and the lives of people around you, your friends and family, and what part of your day do they spend the most on interacting with which companies. Let's talk about if you're sitting at home and you're watching a show. It could be Netflix, it could be Amazon Prime, it could be Hulu. Depends on which one of those services is your favorite. They're all owned by different companies. Netflix is obviously owned by Netflix, Amazon Prime by Amazon, Hulu is owned by Disney, and Disney Plus. Especially right now, if you are a Disney fan, their stocks have tumbled up to 30 to 40% off, and eventually Disney will come back, so now will be a good time to put some money into that. The focus here is exploring what companies and what products do you personally use in your life that you enjoy. And those are the companies that you should start off with, because researching companies, looking at numbers and data, typically is not the most alluring, most fun thing to do. But if you're exploring companies that you personally enjoy, maybe it'll make the whole process a little bit more fun and easier to not give up in the process of it. Let's look at what happened when this pandemic set in. What did people go to the grocery store to buy? What is the first thing that made headlines that just flew off the shelves? Toilet paper. Looking at which companies manufacture toilet paper, that could be a sign to see, oh, their profit in next quarter reported will be a lot higher than estimated because people did not estimate a surge in toilet paper. Or Clorox wipes. Clorox wipes, people love to clean surfaces, going to the gas station, cleaning the panel, the handle, anything. That could be a thing to look at. Or if you don't want to look at one particular cleaning supply, Procter & Gamble. They're a stable staple in the cleaning household supplies. They manufacture so much. If you just look at Procter & Gamble brands, there's a lot that you are familiar with. Or if you're looking at snack foods, Oreos, Cheez-Its, or any of other snack foods that you love, typically a lot of those snack foods are owned by one company, and that could be a thing to look into too. Or if you love to shop online, Amazon is a phenomenal company. That's why they're at their all-time high in the stock price. And the second area where I like to touch on today is to not potentially look at what you think would be the best area to invest in. Go on Google or another search platform and look up what other investors are doing. For example, Warren Buffett. What has he been investing in the past many years? Looking at his portfolio, his company Berkshire Hathaway, a lot of the company sits in banks and airlines. But recently, Warren Buffett has sold some of his stocks in airlines. Maybe that's a sign that the airlines, even though they're getting a lot of money from the government, might not bounce back as quickly as people predicted. Or looking at banks right now is a medium where they're passing out checks from the government, and they're also doing the small business loans. Banks are not going anywhere, and Warren Buffett has a huge chunk of his wealth through Berkshire Hathaway sitting in banks. Or there's other great investors out there. If you search great investors right now and then looking at their portfolio, that might give you some ideas what area of the market to potentially look into. And there's also a lot of free online resources for you to use, such as CNBC, Fool.com, MarketWatch. There's a bunch of other ones. Yahoo Finance News. The last thing that I'd like to wrap up this video about is how much of your total investment amount should you put into each individual stocks, or what area to put into. Speaking from personal experience right now, my money is sitting about 60-70% is in stocks, and then 20 to 30% is in bonds, and then I have 10 to 20% in cash and gold and so on. And the amount of money that I have in stocks is diversified in between index funds and individual stocks. What an index fund is it just a big pot of a bunch of companies. For example, you can buy S&P 500 index funds at different brokerage companies. Mine is with Fidelity. Basically, you just buy a little bit of all the companies listed on the S&P 500. This way, if you're not really good at picking stocks or don't know much about it, you can just buy a little bit of everything. Typically, in the past many years, the average return has been 7 to 8%. Even including recessions such as the 2008 housing bubble, and with this recession going on right now, the average return has always been positive. If you're not comfortable with investing in individual stocks, just put majority of your money, 70-80%, in index funds. They offer index funds for a lot of different things. Basically, stocks, bonds, gold, anything you can think of. And then the remaining 10 to 20, 30%, you can look into companies that you personally enjoy. And hey, let's say you pick some great stocks and you earn some money on your 10 to 30% of investment. That is amazing, awesome. But we also have to face reality that the opposite could happen, because when Disney Plus came out, I put some money into Disney, but now as we can see, Disney has crashed because of the theme parks are closed, and a bunch of other unfortunate events. So even though we want to look at the positive sides, we also have to face reality where it could also drop. You lose some of your capital investment. That's why even though if you lose some of the money from your 10 to 30% that you put into individual stocks, no big deal, because majority of your money is in index funds, and with historical data, index funds and of the overall broad market has always been going up positive, 7 to 8%. So right now, just look into what companies you really enjoy and put some money into it. even though you may think that you missed the bottom, basically missed the cheapest time to buy at the middle of March before the stimulus package came out, but right now, even though everything is growing, it's still 10-20% from where they were back in February. It's still a discount. It might not be best because no one can predict the future. Hindsight is 2020. Looking back is, oh, I should have, I could have, I would have. But right now is still a really good time to look at into investment in the stock market. As always, everything we talked about today is just my personal experience and some educational purposes only. If you want to look into investment, seek help from a professional. There's always a risk on your capital investment. And leave a comment down below with future video ideas. I love to make more videos about topics that people would like to watch. Thank you so much for your support. Subscribe and like this video if you enjoyed it. Have a wonderful day.